Hey, Bulls and Bears, we're back with another dose of economic reality. You're watching Bull Boom, Bear Bust, back with another dose. BX4 News back in the building. Ride the bull, prepare for the bear. Let's go ahead and get into it. A ton of news to get caught up on, folks. We're going to try to encapsulate the entire economic picture for you, as well as give you a lot of current news here. We've got unemployment ticking up somewhat. Not as much as some had feared, but it did tick up, and we're going to show you where that's going to go next. The jobs numbers are out. The jobs numbers from February. Some surprising categories showed jobs that were added, and some others not so well. We're going to get into that. Also, on the border restaurant bankruptcy. We're going to show you how many of those are closing and why. A couple more things here. Social Security. There's new threats. There's going to be disruptions in the Social Security payments because cuts over at Social Security. They're cutting staff there as well. So that's pretty interesting. Finally, Best Buy out there warning of price shock ahead with them likely going to be raising their prices on their goods at that store. And we're going to tie that into the broader economic picture. Of course, let's go ahead and get started right here. U.S. employers added 151,000 jobs in the month of February. Unemployment, though, ticked up to 4.1%. Now, it's pretty interesting. The areas that saw increases where the jobs numbers actually rose, and that was healthcare, finance, transportation, and warehousing. Let's start with warehousing. We know a lot of companies out there, retailers and more, are front-running the tariffs, so they're trying to order extra goods and merchandise to have in the warehouse so they can basically get in before these higher prices hit the cost of these goods. Now, there's still delays happening. The tariffs are on, they're off, they're on, they're off. It's crazy right now. It's on and off. But ultimately, at some point, there's going to be these tariffs that are going to be hitting the economy unless something crazy happens where we don't get the tariffs. But it looks like the tariffs are the only way to keep things sort of level because we're going to see deflation with all the job cuts, right? But the tariffs could offset some of that deflation and kind of compensate for the lower demand with all the new people losing their jobs and all these cuts that we're seeing, which we're going to get more into that here in a few minutes. But yeah, warehousing, retailers, and more front running those tariffs. Transportation, finance. We have people still working in finance, jobs and demand for finance because banks are still lending. The monetary system and the lending right now is very loose. Monetary policy is very loose. Even though mortgage rates are up compared to where they were a few years ago, interest rates are up in general, still the banks have the loosest monetary policy. Besides the higher rates, the lending is still flowing, the loosest of all time with the zero reserves. So, of course, still jobs in finance because so many more people now are dependent on loans and basically borrowing money just to survive. Also, you have healthcare in there, jobs added in healthcare. One of the areas that actually are seeing a rise in jobs added. Healthcare, people are not healthy. We have a big obesity problem. Half the country is either obese or on medication or both. And the food is bad across the board unless you buy some organic food, which less and less people now are able to afford organic food. So they have to buy the cheap stuff, the unhealthy stuff. And you see the cost of organic stuff really going up, cost of eggs going up, and healthcare leading the way with jobs added here. Now, we did see about 10,000 federal jobs that were cut. Now, we're not going to see the full impact of this until the numbers come out next month, and that's going to be for the full month now that we've started seeing these cuts, the full month of March, which we'll see in April. But I'm sure that's going to be very, very big. Also, restaurants and bars are cutting a lot of jobs. 28,000 jobs from restaurants and bars last month. And that was on top of a loss of 30,000 jobs for bars and restaurants in January. So it appears that people are being much more picky, much more choosy about where they're spending money. And that's going to tie us in with our next report here. This is on the border, a Mexican food place here, bankrupt. And we're taking a look at it right here on the border, folks. You might recognize that logo. Pretty good food. I probably ate there maybe a year or two ago. And we have one here just in my neck of the woods here in San Diego. That is a chain of Mexican restaurants, Chapter 11 bankruptcy. So it's going to be a reorganization, but not all locations are staying open. In fact, they're going to be closing quite a lot. They're going to be closing locations across 24 states: Arizona, Arkansas, Colorado, Connecticut, Florida, Georgia, Illinois, Indiana, Iowa, Kansas, Maine, Maryland, Massachusetts, Michigan, Mississippi, Missouri, New Jersey, New York, North Carolina, Ohio, Oklahoma, Pennsylvania, Texas, and Virginia. So California is actually not in there. So that's very interesting. Maybe I'll go pay them a visit, because if they're staying open, maybe I'll help them stay open by going in there. Not that I'm going to make that much of a difference, but on the border, folks, what do we think about that? And the 30,000 cuts and jobs lost in January, and then another 24,000 in February from restaurants and bars. Are people pulling back on the spending because of the debt levels and because of the threat of rising prices right around the corner? That seems to be the most logical explanation. And then, of course, bankruptcy filings here out of a lot of restaurants too, but this is just one of the latest ones here with on the border. All right, now let's look at the unemployment number, folks. Just came out for the month of February, 4.1%. That was an uptick from January, which was 4%, but not a dramatic rise, because we saw it tick up in July of last year and August of last year to 4.2%. And let's go out to a 5-year chart now and take a look here. And we see that ever since 2020, unemployment basically took a big drop. Of course, it spiked at the beginning with the health crisis, pandemic, everything else. Dropped back down. The lowest we got down to was about 3.4. So not a dramatic rise yet. Now, with everything we're seeing now, all the cuts, all the audits happening right now, agencies being basically abolished. Many different agencies are actually on the chopping block. We're going to see this number go way up. Now, there's going to be people out there working part-time, people working second and third jobs just to get by. So that's going to kind of offset some of these unemployment numbers. But we'll get into the full data, especially next month. It's going to be really interesting to look at that. So make sure you stick around for that one and come back to this channel. And let's zoom really far out on this unemployment chart. Let's go all the way back to the 1950s. And pretty much every time we see a recession, we see a spike in unemployment. You're seeing right here, if you're looking at my screen, with the recessions that are notated in the dark shaded areas. Well, every time before one of those recessions and economic downturns, you see an uptick in unemployment. And it's no different this time. We see an uptick. Even though it did drop last month from the previous month, it's still an uptick compared to the lows that we saw just a couple of years ago. So the next thing that has to happen, folks, and I say has to happen, historically it has to happen. I mean, unless it's different this time, and many will argue, yes, it is different. It's a lot different. It's a lot worse. But we're going to see some sort of economic turmoil, economic downturn. They may not call it a recession if they can keep the spending going where gross domestic product is still positive, then they won't even call it a recession, but it will be an economic downturn. It will be hardship for many, many people if this trend continues. And there's several people out there now pointing out the fact that these tariffs may be a way to offset this deflation, right? When you see this many people losing their jobs, which again, we'll see the full numbers on it next month. When you see this many people losing their jobs, it's deflationary, but with the tariffs now causing inflation, it could offset this, folks. And we're going to see how all this plays out, but it's very interesting here. So is the unemployment chart going to be historically correct, where every time we've seen an uptick, it's always led to some sort of downturn? Or is it different this time? Please let me know down in comments your thoughts on this. I'd like to hear from. And speaking of inflation, tariffs, and higher prices, Best Buy is the latest retailer to basically come out and say prices are definitely going higher on their items, on their merchandise. Now, I haven't shopped at Best Buy in a long time. The last thing I bought was a refrigerator, which I'm looking at right over here. I'm in my garage, and this is a refrigerator I got for a very good price. I was surprised. So a lot of people think that Best Buy that was just going to completely go under because of online shopping, but appliances are still pretty good as far as prices go. Microwaves too, some pretty good prices in there. Electronics, I don't think they're as competitive as they used to be. But here's what they're saying here from Best Buy. And Best Buy Chief Executive Corey Berry said during a analysis Tuesday that price increases are highly likely because of increased import costs and economic uncertainty in general. Add on top of that, with the cost of living still being elevated, you're always going to have a demand for higher wages. We saw a record number of strikes in 2024. We're probably going to break that record again in 2025 unless something happens to bring the cost of living down. But so far, it looks like the cost of living is going to come down with massive job losses and cuts to so many of these federal agencies, and basically taking an axe to the workforce is what it looks like. And many retailers feeling some pain as far as their stock price. Shares of Target and Best Buy both fell about 7%, 7.4%. Best Buy and 11% last week. Macy's slipped another 2%. They faced difficulties that go back many years, with a lot of Macy's already closing down, and they're in the midst of a restructuring as well. And we'll have to see how this all plays out in the retail sector. And with the current administration out there saying basically we're going to drill, could we see oil and gas prices come down also to help offset some of these inflationary forces with the tariffs, right? So it could be a big balancing game, and we'll see how it ends up. But I don't think anybody's ever seen what's happening right now, so there's really no historic comparison to try to tell you what's going to happen, right? But we're going to be on the reporting here and stay on top of all the latest numbers and economic news for you. Now, back to something I wanted to get into in more detail here on the jobs numbers and the unemployment numbers here. The number of people added to the jobs that were part-time jumped by 460,000 last month. And in the leisure and hospitality sectors that reflect consumers having extra money to spend, 16,000 jobs were lost. Remember, that's things that people want to do, but they don't have to do. They don't have to go out to the bar. They don't have to go out to restaurants. You can cook at home, maybe. Maybe you can't cook. If you have a microwave, you can cook pretty much. And some people wouldn't call that cooking. I call it cooking, right? Anything that's heating up the food, even if it's a microwave, I'm cooking it. More threats to Social Security. A disruptive effect slashing staff at Social Security is sparking fears that the system could collapse, right? I thought I was dramatic. I thought I was doom and gloom. They're saying here fears that the system could collapse. Is this overhyping the worst possible scenario? Is it fear mongering, or could it possibly collapse the whole system? Well, some of the staff being cut over at the Social Security Administration were employees who manage the system's fragile and interdependent web of computer systems that'll likely leave the agency vulnerable to technical outages and potentially interrupt the benefit payments that are sent to more than 73 million retirees. So what they're saying here is basically the staff being cut could lead to disruptions because they're cutting critical staff is what they're saying. So I think if you ask the administration that's doing the cuts, it's not critical staff. It's people that are not pulling their weight, so to speak. And we know that they sent out emails to millions of people saying, tell us what you did the week prior so we could see if your job is essential or not. So it's going to take a while for this to play out. So I don't see any major disruptions happening in the near future. Of course, anything's possible. But I would say use some caution if you're collecting Social Security. Maybe don't go to that movie. Maybe don't go to that restaurant. Maybe cook at home. Try to put away a little more dollars. Maybe don't go on that trip or that vacation. Put away a few dollars just in case you see your check get disrupted. Because if you're living paycheck to paycheck, but then you're still out there spending money on things you don't have to spend it on, you might want to be a little more cautious. I'm not fear-mongering. I'm not saying it's going to collapse or be interrupted, but I would always urge a little more caution, especially during this time. I mean, why not? And I sometimes get mixed reactions when I say stuff like that. If you have the only live once attitude and you're just going to spend all the money you have every paycheck, go for it. I'm not saying you shouldn't, right? Have fun. Go to your clubs, go shopping, go crazy, go on your vacations, whatever. But I'm just saying, if you're living paycheck to paycheck, now might be a little time to use a little bit of extra discretion in your spending. All right. So on to some other news, folks. Got a few more things I want to get into here, and that's the stimulus checks. Now, some people are saying they're not stimulus checks, but there was talk that $5,000 checks may go out to tax-paying American people. to get basically part of the money back that they're saving. And $5,000 was the number they're still putting out there. They're saying, quote, we're considering giving 20% of the savings to American citizens and using the other 20% to pay down the debt. That's what came out of the current administration here recently. There's been no indication that these checks is a result of cost-cutting measures. Any form of stimulus payments issued by the U.S. government would have to be approved by Congress. In other words, don't expect anything anytime soon. Basically, they're saying they have to be approved by Congress. Well, we've seen Congress get overridden with a lot of things, with these wars that we've seen over the past many decades. All these executive orders, basically those are implemented right away. So they can go above Congress when they want to. The question is, how bad do they want to send out these checks to people? And again, with all the job losses, this may be something that they really want to do to try to offset some of the reduction in spending that we're likely to see with all these cuts and elimination of all these agencies. Now, will the stimulus checks cause inflation? We saw 2020 what happened, 2021 with those checks, those stimulus checks. And again, you may not call these latest round of checks that are being discussed, you may not call these stimulus checks, but that's the word that people are throwing around because the 2020 checks and all that. We saw those checks in 2020, 2021 were highly inflationary, right? And there's many other factors, but it was definitely one of the inflationary forces. But the administration right now is noting that these checks that are exclusively funded by the savings derived from the cuts are unlike the health crisis stimulus checks, which were deficit financed. So basically they're saying because these are not deficit financed, because they don't add on to the national debt, that these will not be inflationary. I would disagree with that. I would say that anytime you have people out there spending money that they didn't have otherwise, it's going to increase demand and it's going to make prices go up, right? So how many people are going to get these $5,000 checks, go out, put a down payment on a car, and maybe go put a deposit down on an apartment and drive rents back up and drive car prices back up? Down payment on a home, not so much, but we do have zero down payment programs now to buy homes. So that could be something else that gives people more confidence to try to go ahead and jump into the housing market. I mean, we'll see how it plays out, but to me, I see this as more inflationary rather than being neutral. And finally, let's wrap it up right here with Las Vegas housing market. The housing market is finally starting to soften in Las Vegas. Now, we did see Las Vegas had some pretty big rent drops recently. Well, the housing market looks like it could be ready to turn in Las Vegas. Sin City, the median price in that city reached $470,000. That's still up 1.1% over a year ago. Wow, that's high for Las Vegas. At the same time, the number of active listings actually went up 60% year over year. Now there's over 7,400 properties for sale in Las Vegas. Now that stopped 6 months of uninterrupted, I should say, stopped it, added to the 6 months of uninterrupted inventory growth. So it's interesting, the inventory has been going up for 6 months, but we're not seeing price declines year over year yet. We're seeing month over month declines, but not yet year over year. New listings were up in February, surging 20% from last year. According to the latest Realtor.com figures, a typical home in Las Vegas spent 47 days on the market, and that's up 19% from the number of days on the market from 1 year ago. And a lot of this is going to depend on how the banks react to this. If they loosen their lending more and allow lower credit scores to get into homes, if they continue these zero down payment mortgages, which there's a lot of them right now, 0 and 3.5% with FHA and even 5% even with non-FHA, they can keep this bubble inflated, folks, if they decide to. It's all about how the banks and the money being loaned out is either restricted or loosened even further. Believe it or not, they can loosen it further to try to put some air back on this bubble, folks, not just in Las Vegas, but nationwide when it comes to this housing bubble. So housing market news, more coming up on the next report, more a deeper dive in that report. Please make sure you subscribe right here, this button right below my finger. Please keep this channel alive. Appreciate your help, appreciate your support. Let me know what you think about all this. The Best Buy going up on the prices for sure with other retailers. Cuts to Social Security, disruptions to Social Security. Is it going to happen on the border? Bankruptcy, Chapter 11 reorganization. Another restaurant to add to the list. 2025, folks. Going to stay on top of it for you. Please make sure you subscribe again. Big love. As always, keep stacking. Bye for now. Peace.